Tough new lending laws the city of Dallas enacted to protect consumers may actually be hurting them. Now, we've learned one short-term lender is forcing some customers to move their loans outside of the city, where lending practices can send customers spiraling into debt. Our Brett Shipp tonight joins us with some details. Brett?
That's right, John. The Dallas City Ordinance applies to payday and car title lenders. Council members sending a unanimous message to stop exploiting the poor in our city. But one of the lenders is fighting back, forcing customers to transfer their loans outside of Dallas where the new rules don't apply. So what can Dallas do about it? Tonight, News 8 investigates. The nightmare stories are as old as the loan business itself. Short-term, payday, and auto title loans with interest rates of up to 500%. Consumers getting caught in the quicksand of debt.
This is exploitation masquerading as commerce.
Gerald Britt of the nonprofit charity City Square says it's one of the major reasons for financial despair in the city. Low-income residents taking out high-interest loans they can never pay back.
It gets them ensnared in a cycle of debt that really not only makes it difficult for them to get themselves out of poverty, but pushes them deeper into poverty, making it difficult for them to provide for their families, making it difficult for them to pay their other bills.
Last summer, acting on thousands of complaints, Dallas City Council members unanimously passed what could be the toughest restrictions on payday lending in the nation, ensuring that customers can't borrow more than they can afford to pay back and capping the number of times they are allowed to renew their loan. A law designed to help this woman whose identity we agreed to protect.
They just trying to suck the money out you. That's the only thing I can see.
1 year ago, Title Max in Dallas loaned her $2,000 in exchange for the title to her car that was worth about the same amount. Over the past year, she has paid about $250 a month, more than $3,000. Yet she still owes more than $1,400. If she continues to pay $250 a month, it will take her nearly 2 more years, a total of $9,000 to pay off her $2,000 loan. When she first signed up for the loan, the interest rate was 258%.
She told me the 258 was straight interest. I told her, I said, on a $2,000 loan, $250 is straight interest and nothing is going on the principal. And then that's when I realized I was locked into something that I shouldn't have never got locked in.
2 weeks ago, she got another shock. Title Max told her it was moving all existing loans to neighboring cities following the enactment of the tough new restrictions in Dallas. According to the paperwork she says she was forced to sign, her new interest rate at a branch outside the city will nearly double to at least 310%. She fears she will now default on her loan and lose her car.
What happens if you lose your car?
Then I don't know what I'll do, because I don't have money to buy another car.
Title Max branch manager Eduardo Lobo confirms to News 8 our customers will have to go to another branch because the company, by law, can't take payments for our customers in the city of Dallas. As to the belief that interest rates may nearly double, quote, that's not correct. All our branches have the same interest rate. All our customers' interest rates will remain the same. Dallas City Attorney Tom Perkins says his office is concerned that businesses might be moving out of town rather than conform to consumer protections.
We're looking at the issues associated with this transaction and some of the practices by this company. We're looking at whatever options the city has available to it at this point to address this kind of issue.
And the city is also being sued over its new loan laws, a lawsuit the city attorney says he will vigorously challenge. And Gerald Britt of City Square says a campaign is underway to convince neighboring cities to adopt the tough new laws already in effect here in Dallas and in Austin. Brett Shipp, Channel 8 News.